Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, China's electric vehicle industry is threatening to dominate the market. Can U.S. automakers step up and pull ahead of the competition? And later, a big week for artificial intelligence. NVIDIA's blowout earnings show how companies are leveraging technology, but are investors setting themselves up for a big disappointment? But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levisohn, Jack Hough, and Teresa Rivas. So, Ben, we all think last week was scary. There was a bad drop in the market on Thursday. But when you looked at the end result, the S&P and NASDAQ were up. Dow was down a little bit.
Yeah, I mean, if you looked at the market, the Dow, it was a terrible week. The Dow was down more than 2%. But then you look at the NASDAQ, it was up more than 1%. And the S&P, it almost did absolutely nothing. It would have been the most boring week possible. And there were lots of reasons being thrown around, whether it was the Fed minutes and rate hike fears and all that kind of stuff. But really, it just comes down to NVIDIA. The big chip maker came out with earnings, jumped something like almost 10%. And whether you owned NVIDIA or not really determined whether the index went up or not. NASDAQ owns lots of NVIDIA. S&P owns still a good chunk of it, but not as much as NASDAQ. And the Dow owns none. It only owns Intel. And that really determined which index was up and which one was down.
You wouldn't suggest that investors run out and load back up the truck for NVIDIA, though, right? I mean, most of us actually own NVIDIA through an S&P 500 fund or an actively managed mutual fund.
That's right. I mean, if you own an index fund, an S&P 500 index fund, you have a 5.8 percentage point stake in the stock. It's the third largest holding in the SPY ETF that follows the S&P 500. So you really don't need to go, buy another chunk of this unless you really think NVIDIA is going to keep going up. But I just think getting that kind of concentration in any one stock, you already got enough in the S&P 500.
That makes sense. So we've got a long weekend. Coming out of the long weekend, a few earnings reports will trickle out, but really, I guess inflation will be on everyone's mind.
That's right. I mean, we're going to get things like Costco. We'll get Salesforce.com, but they're not going to really move the market. What will is PCE. That's going to get released. It contains the Fed's favored inflation metric. The core PCE is supposed to, price index is supposed to rise about 2.8%. That would be the same as last month. We really need to see that start moving down. If there's a surprise higher, it's going to be bad news for this market.
All righty. Let's move to Teresa. A tale of two retailers. The week before last, we saw Walmart come out with great earnings, and they projected good things ahead. Target came out this past week, not so much.
It pains me to say this as someone who is Target all the way, but it honestly feels like Walmart is the new Target and vice versa. If you're thinking of a pleasant shopping experience in a well-stocked, bright store, you used to think Target, whereas the new Walmart supercenters look like that. And Target are the stores that are kind of dingy, not well-staffed, running out of stock. It's unfortunate, but I feel like that is really playing out, and you see that in the earnings. There's the question of closing self-checkouts to reduce shoplifting. Target's been successful there, but at what cost? I personally have walked out of the store without buying things because I don't want to wait for the 2 cash registers that are open.
So I'm not sure what the Frankification of Walmart is, but it sounds as if the whole store experience is becoming more Target-like, and they're doing other things very well too, right?
Certainly. I think we've seen them increase the range. You see a lot of high-income Americans shopping there now, and Walmart makes that easy with something like Walmart Plus. That's their subscription service, and they're doing a lot of other things right too in terms of branching out into advertising and other high-margin businesses.
Yeah, it's really interesting. They have so many people coming to their website, they can actually sell advertising against that.
Exactly. All those eyeballs are really valuable the same way they're valuable on something like Amazon.
Sure. All righty. Jack, you flew back from Houston where you experienced a terrible storm just in time to experience a terrible storm up here. What's the market connection to that?
It's getting nuts. Well, we're coming up on the start of the Atlantic hurricane season. That's June 1st. It runs through November. NOAA, that's the weather science group, they say it's going to be a double doozy. It's the highest probability ever of a bad storm season that they're predicting. And it's also, they're predicting the greatest number ever of named storms. We could get all the way from Alberto through William this season. And you should say a prayer for your homeowner's insurance because costs there are soaring and companies are getting choosier about their coverage. In Houston, freak storm, 100-mile-an-hour winds knocked out power for 1 million people. One woman that I spoke with said her roof was damaged. She's not sure how she's going to pay for it because she wasn't able to get coverage from a private insurer. She had to use state coverage, which she said is not very good. That's becoming common around the country. I come back to Westchester, New York, where I live. Freak hailstorm took down branches all over my town. Nothing on the scale of Houston, of course, but a lot of people are wondering, is the wacky weather coming for them next? And financially, it might be, because there were 18 states that ran losses last year in the homeowners insurance business. And so, as I say, that's causing companies to raise their prices and to get picky about what they'll cover.
Yeah, it's really difficult for homeowners. I'm wondering, though, what does it mean for the insurance industry? Are they going to be able to raise premiums enough to cover the potential losses?
So the way it usually works is, you get this base level of storms each year. You get one really bad year. The insurance companies run a loss. Everybody raises prices. And then investors actually turn bullish on the stocks because they figure, okay, the prices are going to stick, the higher rates are going to stick, and we're going to go back to normal on the level of damage. And we've actually seen some of these stocks running up lately. The problem is, if Noah's right about the coming hurricane season, if that's real bad, and if we do see this higher base level of storm damage, the biggest increase in storm damage in damage around the country hasn't been from hurricanes, it hasn't been from wildfires, it's just been from severe storms that aren't hurricanes. So if we see this higher base level of damage going forward, it might not be so profitable for insurers. We might see a continuation of rate hikes.
And there's still some nice communities on the East Coast toward the north that are very vulnerable. I mean, if a hurricane of 38 comes through again, that's going to be ugly all around. Thank you, Jack.